Hey, good afternoon, fam. Good afternoon. Hope all is well. Listen, I want to talk about something real quickly, right? As I'm doing this video lately or dropping these contents lately in reference to retirement planning and, people not having sufficient retirement income, right? I was doing some thinking, right? And I wasn't initially a fan of this, right? But as I'm deep diving into this and learning more about it, right? Um, retirement, considering a reverse mortgage may be an option for some people, but considering it with a twist, right? What do I mean? Now, I'm not a mortgage person, I'm not a lender, I'm not a realtor or whatever, right? So you may want to, give them a call and have a conversation in reference to how it works. I'm just giving you the gist of it. So pretty much what it is, if you're strapped for cash or you don't have any cash for retirement or you have minimal cash and you see your home is there, you got value in your home, or you may even have some equity in your home, right? Instead of taking a line of credit out, which will now create two mortgage payment, okay, you can do a reverse mortgage and based on the value of your home and all these things like that, right? They'll give you kind of like, for example, like a loan, against your house in the way that you don't have to pay back until the last spouse. So for example, if it's two of y'all in the home, let's say husband and wife, right? And you guys took the money out, or you guys accepted the reverse mortgage. Well, what happens is if once the last spouse passes away, okay, that's when at that point they will want their money, okay, back. And a couple of options: you can sell the house, right, or the heirs, which is your children, whoever you live in the house to, can sell the house, and then whatever you owe that lender, right, um, they can go ahead and at that point, collect, okay, and that's in a sense kind of like the way it works, right? Now, the reason why I say reverse mortgage with a twist is you can actually take out the reverse mortgage and immediately get life insurance on both spouse, right? Life insurance for the value of the house. So let's say, for example, your house is valued at, I don't know, let's say 280, or even whatever they took out for the reverse mortgage, right? Immediately get life insurance on both parties, right? For that loan amount, in a sense. And the reason why I say that is this, because now when the individual passed away, that life insurance death proceed can now come back to pay that money off, and the family can still keep the house instead of having, in a way, to be forced to kind of like sell the house if they don't have money to repay, you understand, that money back. You understand? So to me, I think it's a great plan. I mean, from what I know about it, you gotta be at least age 62. I believe you do have to have some form of decent credit, I believe, going on. Yeah, 62, some form of decent credit. And I don't believe that your house have to be 100% paid off, but from what I've read, I do believe it have to be at least close enough or something like that. I'm not quite sure, but again, I'm not a lender. Each lender might be different in reference to their criteria. You might want to have a conversation with them about it. But I think it might be a great idea if you're 70 something years old and you ran out of money for retirement, right? And you have this property here that's worth something, but you still need to keep a roof over your head, okay? You might want to consider a reverse mortgage in that aspect, and then so the house can still stay, within the family, when the husband and spouse, passes away, then get some life insurance, on that individual, and I would suggest a IUL or a whole life, something permanent, because you never know how long that person might live. You might be 71 now, you took out the loan, and you might not pass away until age 100. Well, you cannot do a term policy for that, because a term policy at 71 will only carry you for 10 years. So after 81, you might not have any more coverage, but you'll still be here. You understand? So I would suggest at that point, maybe just do a permanent policy. You understand? And for example, if it's a situation where, let's say, you just cannot afford your mortgage anymore, right? Let's say your mortgage is $2,500 a month, okay? And you are able to now get into a reverse mortgage, right? And now you have no monthly payment anymore, okay? The loan will be satisfied when you pass away, okay? But at some point you were paying $2,500 a month. Let me tell you, at 71 years old, you can probably open yourself up a 250K, maybe 400K policy, IUL, and deposit $1,000 a month in there. And if you pass away at age 85 or age 90, man, not only do you have that 400K that's gonna pass on to your family, you also have liquid money. As a matter of fact, you can probably take out the cash from the life insurance on cash value to pay off your debt for the reverse mortgage, and your family still gets 400K. You understand? Listen, man, like it is a strategy that I think a lot of people who have not, saved properly or save at all, may want to consider, if they have a home and if the home has value in it. It doesn't work for everybody, but it's something that's worth looking into. You understand? So yes, so if you guys want to have a one-on-one with me in reference to life insurance and retirement planning and living benefits and healthcare, all these things like that, assisted living, how you be able to do that if something was to happen to you, text me at 443-208-5480. That's 443-208-5480. Let's start to get your finances together. The planning starts now. The planning starts now. You understand? I forgot back in the day they used to say every year after you graduate college, that you wait to start to save money for your retirement. It's an extra year that you have to tack on to how long it would take you to start working. So let me explain that to you. Let's say you graduated college and you got a job. Let's say you're 22, right? And you got a job and you haven't started to fund your 401k or IRA or life insurance or whatever, right? And let's say your goal was to retire at 60. So you're 22, but you didn't start saving until you're 40, right? That's 18 years. Okay? So you may have to work to age 78. You understand? So if you started saving at age 40, you may have to. It depends on also too if you're max funding a plan, because you can play catch up. But if you're doing like regular savings, it might take you like, another. I'm sorry. It might take like another 60. Yeah, 60, 18 years. Yeah, it might take you like age 78 or so for you to actually literally stop working. And that's what's going on right now. You understand? I think the Census Bureau just released some data the other day. People at the age of 55 to 66, 49% of people in that group have zero retirement. Can you imagine? 49% of those people have zero retirement. As a matter of fact, let's find out together, right? How many people that is. Let's see. Let's see here. Let's see what Google will give us, right? What percentage of people in the United States are between the age of 55 and 66? Okay, so the data says roughly 12% of the United States are around the age of 55 to 66. Okay, So out of that 12%, 6% of those people do not have any retirement savings. Okay, that's a huge number, right? Because right now I believe it's close to 400 million people in America. So 12% of 400 million people, that's a lot. That's a lot of people that don't have any retirement savings. And we want to put a stop to that now by just constant education and taking one person and moving them further along, taking one person and moving them further along, taking one person and moving them further along. And hopefully they can turn around and teach their children and their grandchildren and people around them, and they get to get started sooner than later. All right. So again, listen, if you guys want to reach out to me, you can reach me at 443-208-5480. That's 443-208-5480. Thank you so much, and I'll talk to you soon.